Welcome to The Explainer. Okay, so today we're looking at one of the absolute most fascinating contradictions unfolding in the digital assets space right now. Just picture a hardcore Bitcoin mining giant. You know the drill. Massive warehouses, thousands of mining rigs screaming around the clock, and a pure, unadulterated focus on accumulating Bitcoin. That's the standard model, right? Well, recent reports have completely shocked Wall Street. Bitmine, a massive player in the space, is literally using its precious cash flow to aggressively buy up its biggest rival, Ethereum.
I mean, it really begs the question, why on earth is a Bitcoin miner buying Ethereum? Is this just your basic, everyday risk diversification play, or is there some hidden grand strategy at work here that the rest of the market hasn't quite caught on to yet? Well, we're going to dig into the on-chain data and dissect the four core logical pillars behind Bitmine's master plan.
And guys, the reality of what's actually happening on-chain is wild. According to recent data and some deep dive reports we've looked at, Bitmine isn't just quietly picking up a few tokens on public exchanges. No. During recent periods of market volatility, they've been accumulating Ethereum by stepping in and taking over holdings directly from the Ethereum Foundation itself. They are actively choosing to allocate heavy capital here, rather than just endlessly hoarding the Bitcoin they mine.
Part 1. The energy to capital shift.
So, to really grasp this move, we've got to look at the financial philosophy of Bitmine's CEO Tom Lee and how he views raw blockchain mechanics. You know, Bitcoin's proof of work means fighting constant hardware depreciation, relentless maintenance, and massive energy overhead. Ethereum's proof of stake, on the other hand, shifts that paradigm entirely. It's a capital-intensive asset that fundamentally transforms the mechanics of a corporate balance sheet.
And that shift yields a very powerful 3 to 5%. For Bitmine, holding and staking Ethereum acts exactly like owning prime digital real estate that automatically generates rent. Think about it. Without having to pay a single extra cent in electricity bills or physically upgrading server racks, Bitmine earns a native, stable, annualized yield. For a mining company that's constantly battling overhead costs, this is just a beautiful, stable cash flow compensation.
Moving on to Part 2, hedging the Bitcoin halving. Corporate survival in the upcoming 2026 market relies heavily on rapid sector rotation. That basically means moving capital quickly between asset classes to maximize returns and hedge out risks. By absorbing Ethereum during the foundation's sell-offs, Bitmine is essentially building its own internal crypto hedge fund. They know full well that after a Bitcoin halving, mining difficulty skyrockets, and those profit margins, they get severely squeezed.
Based on some really solid historical analysis from AB Media, the post-halving reality for Bitcoin is often this brutal sideways consolidation phase, marked by fierce competition and shrinking margins. But during these down cycles, capital rotates, right? And Ethereum often leads the rally. So by holding ETH, that price appreciation combined with the staking yield becomes an absolute financial lifeline. It makes Bitmine's balance sheet look incredibly bulletproof exactly when traditional pure-play Bitcoin miners are struggling the hardest.
Which brings us to Part 3. AI and infrastructure strategy. Now, this is the deepest, most visionary motivation behind their accumulation. Step 1. Bitmine is actually pivoting its core operations to provide AI computing services. Step 2. Because AI requires immense computational power and totally seamless settlement, Ethereum acts as the essential fuel for all of this. And Step 3. They plan to actively participate in building out Ethereum Layer 2 nodes. So ETH isn't just some passive investment to them sitting in a wallet, it's the required technological fuel for the entire future decentralized AI economy.
And buying in massive bulk serves a very specific structural purpose. Holding significant bags of ETH secures Bitmine's usage rights and a really powerful voice in the future digital economy's settlement systems. It facilitates super smooth payments for decentralized AI model licensing fees. Plus, doing these massive over-the-counter trades directly with the Ethereum Foundation, that ensures they grab enough voting power and influence to literally be a dominant player in the infrastructure of tomorrow.
All right, let's wrap this up with Part 4, the Future Survival Guide. First off, we've got to recognize the sheer conviction behind this entire move. Bitmine CEO Tom Lee flat out stated, "This is the best investment opportunity in a lifetime." I mean, wow, that is a massively bold claim for a Bitcoin miner making a huge bet on Ethereum. It really underscores that, internally, Bitmine views this multi-layered strategy not as just some quick, short-term trade, but as a total generational shift in how digital wealth and infrastructure are built.
The ultimate survival tactic to take away from all of this is cross-chain diversification. Think about it. If a massive institution like Bitmine realizes that relying on just a single asset, even one as incredibly powerful as Bitcoin, is outdated, then everyday investors really need to take note. Strategic, cross-chain positioning, exactly like what Bitmine is doing, might be the absolute key to thriving in the volatile conditions we're going to see in the 2026 market.
Which leaves us with this final, provocative thought to ponder. When a traditional Bitcoin mining titan starts accumulating massive bags of Ethereum, is it a betrayal of their original ethos, or is it simply the ultimate evolution of a digital asset company? The lines between traditional crypto categories are blurring faster than ever right now. So take some time to think about what this means for your own understanding of the market. Thanks so much for joining me on this explainer, and I can't wait to guide you through our next deep dive.